Let's do this. We are going to have a conversation about saving money today because I feel like that a lot of people are coming to me about saving money, what it looks like, what is a fantastic way to be able to start any kind of savings fund that you may be looking at. I personally don't believe in savings. I don't believe in the savings accounts that are in the bank. Why? Why don't we use savings accounts that are in the banks? Well, that's because we know all about fractional lending, and that means that they are using our money to do with it what they want to do with it in lending it out. So why would we put anything in something as volatile as a bank to save our money? That's what we want to talk about. A lot of you guys have been asking me too about the IBC. What is the IBC? How does it work? Why do I do the infinite banking? So that's what I want to talk about here for just a few minutes to give you some ideas on what to do with that money. If you have a money that is sitting available, even let's say that you want to start doing some kind of investing after you've used velocity banking and you've gotten your debt under control. I started working with the IBC when I wasn't quite out of debt. I wasn't quite out of debt when I started my first one. But you have to realize that if you're going to somebody that your brother-in-law Bob, and he's an insurance agent, and you say, hey, I would really like to set up one of those, um, infinite banking policies. And they're like, yeah, let me set you up an IUL. Well, you know that brother-in-law Bob has no idea what he's talking about. So you want to get educated before you start jumping into any sort of infinite banking concept policies, okay? It's super important that we understand there is a difference with these specialized policies. So we're going to talk about saving money in the IBC. What is the IBC? Well, it's the infinite banking concept. So for you guys who have no idea what I'm talking about, this is probably as you probably have never heard of this. So this is probably as different of a concept as the velocity banking was to you when you first heard about it. Now, the IBC, let's talk about what it offers when it comes to your money and why is it that I, Christy VANN, would use IBC instead of investing into the stock market, for example. Okay. This is a deep conversation for people because we're just assuming that we know what to do with the savings. Because why? Because why? Let's talk about it. Why do we get loans? Why do we take loans? Well, that's what we were taught to do. That's just what we do, right? So why would we listen to anything that somebody has told us in the financial world about where to save our money? Why? Because that's just what we've been trained to do. Okay. So, super important that you understand that everything has an outside of the box thinking to it, right? We're not into the system, we're thinking outside of the system. What can we do that is really good for our money? How can we use our money more than once, more than twice? I know that's a very foreign concept, but it works. And that's why I teach a foreign concept to American finance, is because there are different options that you didn't know about. So it's super important that you really listen up here and you really learn from the channels that are trying to teach you a better way financially, because there is a better way. So when we're talking about saving money, example, I worked with a guy today. He had over $330,000 sitting in a savings account. $330,000 sitting in a savings account. And we were talking about how to buy the home he wanted to buy. So, in the way I feel about lines of credit, I said, don't get a mortgage, get a line of credit, purchase your home, then turn around and put your savings back into that line. So, is it kind of like he even bought a home? Think about that for a minute. Think about that. If he had the money sitting in savings over here in a bank, okay, so here's the little bank. The savings is here. He is buying a home. He's a first-time home buyer. He's buying a home and he was wanting to know what would be the best way to purchase this home. So his idea was to get a mortgage and do it on a 15-year term, and he would pay it off in 15 years, which would save him a little bit of interest. But he never thought about forgetting the mortgage. Let's buy the home with a line of credit, like I teach on the channel. This would be a first lien or an all-in-one. So this is a HELOC. Yes, you can purchase a home with a HELOC. A lot of people do not know that. I was not aware of that, but there are banks that do the lines of credit, okay? So with the savings he had, if he took, now this home was 238,000 or maybe 338,000, I can't remember. It was somewhere in there. But he had enough in savings to pay it off. So if the home is, let's say it's just 250,000 to give us an even number. But he has 250,000 sitting in the bank. I know, I was so surprised. I've never had $250,000 just sitting in the bank in a savings account, but he did. So his question was, how do I buy the home? Well, my idea, and I'm not a financial advisor, but if I were in this man's situation, I would get the line of credit for this amount, purchase the home, then turn around and put my money right back into the line of credit. So if the line of credit balance of my home purchase was 250, I put the 250 that I have in savings. What does it make the balance of that line? 0. Well, if it makes the line 0, but he can pull back out of this line anytime he wants, well, where's his savings? His savings is in the line of credit. So now, if he needs to buy a car, he writes a check to himself from the line of credit. To me, this is a total common sense. Why would I go get a mortgage and have 200 and some thousand sitting in the bank that I could pay cash? He could just take the savings and put it into the home, pay it off, right? But then he has no access unless he gets a line of credit or a HELOC on this home. So he has access to the equity in the home. So if he is not drawing, if this is an 8% line of credit and he just does this part, then is he drawing 8% interest? Is he gaining the 8% interest in his savings account? Probably not. And the idea being that if you just strategize a little bit with your money, that's all you need to do, is know the tools that are available and then strategize. But what I want to talk to you today about is this infinite banking concept. This is something that when you hear it, you're going to be like, what did she just say? Why have I never heard of this before? Because I know that over 90% of you watching right now have never heard what I'm getting ready to talk about. Because why? The same reason maybe you didn't know about a line of credit and how it worked. But I want to show you what I do with any savings that I have now and what this guy is going to do with his savings. Not only is he going to start growing his savings, but he's going to be able to use it to purchase this home. Now, there's going to be some really deep things coming out here, and that's why I'm going to go super slow, elementary style. Teach it to me like I'm 5. That's how I live. That's the way I have to be taught, and that's the way I teach on this channel. So now let's talk about, instead of, which don't get me wrong, I would still get the line of credit. I'm always going to have a line of credit on my home. Why? Because if I have a line of credit open and available to me, if I find another property that I want to purchase, then guess what? I get to write a check. I don't have to go get a mortgage. So if you have a home, you may want to consider opening up the line of credit if you have not already. Okay, we talked about that a little bit in last night's live on what that looks like to get the equity out of your home. So definitely go back and check that out. We've got somebody that has a first lien HELOC. Good for you. I hope it's working wonders for you. But I want to talk a little bit today about the IBC. Okay, so I have people all the time, every call nearly. Hey, I have some savings in the bank. What would you do with it? Well, I used to say, well, if you have debt, then let's see if your savings is drawing as much interest in your savings as you're paying out in debt. Okay, so this is simple, guys, so hold on. If I have $5,000 in savings, okay, and it's sitting here, and then I have credit card number 1 that has a $2,500 balance on it, and I'm paying $200 a month, and it's at 25%. And then I have credit card number 2, and it has $750 on it, and I'm paying $50 a month, and it's 29.99%. And then I have credit card number 3, and it has $1,000 balance on it. I pay $100 a month, and then let's say it's got a 21% interest rate. So if I have this debt over here, I always look at that debt compared to the savings, and then we talk. So if I have somebody that comes to me and they've got credit card debt, so this is $2,500, $750, and $1,000. So $4,250 is the amount of debt they have. They're paying $350 a month in payments, and then their interest. So if you were with me last night, you watched how we calculate the interest on these credit cards. So for $2,500 times 25% divided by 12, it tells me that they are paying $52 per month approximately in interest on this one card. Okay. And then for the 750 at 29.99%, they're paying $18.74 in interest per month. And then the 1,000 at 21%, $17.50 in interest per month. Okay, so $4,250. They're paying out 52 on one, 1750 on the other, and 1874 on the last one, which means they're paying interest of about $89 per month. So my question is if you have savings sitting in the bank over here, and then you have debt that's gaining $89 per month in interest, when you ask the question, what should I do with my savings? You might want to ask yourself, is my savings gaining $89 per month in interest every month? Is it gaining 89? If it is, then you're breaking even, okay? Because you're paying it out over here, but you're gaining it over here. But what if you're doing if you got this in a savings account at the bank, you might be drawing 0.0125%. The banks don't pay much when you have savings sitting in their savings account, do they? So if you think you're saving money, but yet you're paying interest, you're losing. This isn't a positive. You're losing $89 a month, even though you don't see it coming off of your savings balance. You're paying it out of your income into here. So totally, common sense says, well, I would want to pay off my debt, but there may be a better way. That's where the infinite banking concept comes into play. So let's watch this for a second. Now, I love the IBC because I just think it's a glorified savings account that I absolutely love. Whereas the IBC is really just a whole life policy that's specially designed for you to kind of make money while you're using money. Let's see what I mean by that. So let's say that I have $5,000 in savings and I still have that credit card debt I just talked about here, but I take $5,000 and I put it into an IBC whole life policy. What does this mean? This was so stupid to me when I first started. This was so stupid when I heard this because I don't like paying car insurance. I don't like having to pay for health insurance. I don't like having to pay for life insurance. I feel like that, by the time you do your E&O insurance and then you're covering your home insurance, it just seems like it's a blow, right? It just seems like it's another way for the companies to make money. But the whole life that I learned about with the IBC makes me want to run around the room in excitement because of this. If I take 5,000 and I set a premium up to where I'm paying $5,000 in, they will work that out according to what kind of scenario you have going on in your own life situation. So you would have to have a conversation. I'll give you some information for that later if you want to. But when the 5,000 goes into this whole life, what happens to it? Well, sit down because you're not going to believe this, but this starts growing at compound interest. Okay. Okay, so that's pretty exciting. Compound interest, that's pretty exciting. This also pays dividends. Now, they're not guaranteed, but the companies that I have been paying out dividends for 100 years or more. So I'm enjoying the benefits. So you've got compound interest, pays dividends, and it's guaranteed. What does that mean? Is your money guaranteed when it's sitting in the bank? I don't think so. Guaranteed. Now, what do I look for when I'm looking for somewhere to put my savings? Well, I like to look at guaranteed growth. Guaranteed growth. Do you have guaranteed growth in your stock fund right now? Guaranteed growth. Why is it guaranteed growth? Well, because of this compound interest. So it's compounding. It's beautiful. Guaranteed growth. But what's better for me? What's better for me than the guaranteed growth is this one. Guaranteed not to lose it. Do you know how when you're a broke person and you're living paycheck to paycheck most of your life, that when you think about putting into the stock market or something, you know that feeling that comes over you like, but what if I put this in there and the stock market falls and then I lose all my money? Real scenarios every day, right? Very big risk, very big risk. So if you put your money into guaranteed growth, guaranteed not to lose it, that right there sold me. I'm like, let's do it. Oh, but wait a minute. I don't want it to be like a 401k to where I can't touch it until I'm 59 and a half. So do I have to wait until I'm 59 and a half before I can use this? Nope. What can we do? We can take loans from this. This is our money that goes in. This is our premium money. With this premium, not only comes guaranteed growth, guaranteed not to lose it, but it comes with a death benefit, just like you know a whole life to do. So guess what? My kids are now covered. Anything happens to me, they're good to go. Right? That's a very good feeling for a parent. So guaranteed growth, guaranteed not to lose it, and you get the death benefit. Okay. What else do we have here? We can use it. So we can take a loan from ourselves. Now, when I heard that, I took a step back. And I literally had a conversation. Why would you take a loan from this? Well, a couple of things. Go with me here. You're not going to believe this because it took me a long time to get all of this in order where I could feel it and believe it myself. So I'm with you, okay? I had to walk all of this out. And I'm kind of letting you jump light years ahead by bringing it to you in layman's terms so that you can kind of understand what I'm talking about here. You'll still need to study this. But when you take a loan, you're taking it from the insurance company. Okay, now go with me because you know I'm always saying I don't like loans. Loans are a ripoff. You know I say this. Now you're hearing me use the word loan, but I'm getting ready to flip it around, okay? I'm getting ready to flip it around because I thought it was a loan too that we took from the insurance company on our own money here, whatever you put in. Dudes, it's a line of credit. I know, because I said to Chris Noggle one day, I said, okay, if I take a loan, and let's say I take $4,000 from this account, and I have it transferred into my checking account at my bank. when I take the 4,000, if this death benefit is $100,000 and I take 4,000, I do not have to pay that back. I don't have to pay that back. Unbelievable, right? Well, hold on. Because, well, why don't I have to pay it back? Well, because they're going to deduct the 4,000 off of my benefit that my beneficiaries get. So they would get $96,000 instead of 100,000. So I was always like, okay, all right, I see this. My money's growing. I'm making some extra dough here. And if I take a loan, I don't have to pay it back. Then Chris and Oggle said to me, you always want to pay it back. And I'm like, why? Why would you want to pay that back? It's a loan. We know that when we make a payment into a loan, it's gone forever. It's over. We have no access to it. He said, no. As soon as you pay your payment or pay back the whole amount into the line, it's there for you to use again within 30 days. When he said that, I got so excited because I had a loan out on a current policy that I have, and I immediately went online and paid it all back. Why? One, it got it out of the bank. So they're not using my money in fractional lending because it's not sitting there. It's sitting in my own account here for me to pull it back out in a line of credit and use it again. When I heard those words, I was so sold on the infinite banking that I can't wait to make my next premium payments. I can't wait. I can't even express that enough, how excited I got with learning how to use these things, because that was brand new to me. I'm not done telling you the benefits. I'm telling you, don't be stressing out, because when you put your money in here, you can take a loan that's really a line of credit from the insurance company. But hold on, it gets better. This gets better. Listen, life is good in the VANNtastic world. Okay, so I put my savings into my policy. My savings is now sitting there growing at compound interest. I have it in a mutual insurance company, so it's paying dividends. It's guaranteed growth because of this compound interest. The dividends are not guaranteed, but the companies that I'm with have been paying dividends for the last 100 years. Guaranteed not to lose it. The death benefit for my kids is in there. If I want to take a loan, I can. But let's imagine now, let's go back to that savings account just a minute. The savings account that we had that 5,000 in, okay? Now, let's say that you've got a really good bank and wow, they're giving you 4% right now. Let's just imagine 4% interest, okay? When I take that, remember the amount, the $42.50 that we could take and pay off the credit cards with at the beginning of this live? If you didn't see that, then go to the YouTube channel and watch the whole live. But if I took even, I don't know, $1,000 out of my savings, okay, we're back at the bank here for a second, and that leaves a $4,000 balance, right? Because I'm using $1,000. That reduced it, and now I'm drawing a 4% if that's what the bank pays, and Be thankful if you get that much, but I doubt it. I'm drawing 4% interest on the 4,000 now, not to the 5,000, right? Because it's no longer 5,000 in there, only 4,000. If I were to tell you that if you did the same over here and you took a $1,000 loan from your $5,000 balance, what is the compound interest still growing on? What's it growing on now? Your original amount of premium paid. It is still growing, even though you have taken a loan, and this is the collateral for the loan. It's not like this. Your balance doesn't reduce and then they pay interest on that. The amounts that you are depositing in your premiums annually, however you're doing it, this continues to grow at that amount. Is that unbelievably beautiful? Now, hold on a minute, because I get excited about this stuff because this has changed my whole view on saving money. Okay, so let's say that we're in year 2. Okay, so we made the initial 5,000 premium in year 1. Year 2, I put 5,000 again. So what did this balance become? Isn't it now adding another 5,000? So it's 10,000. So what is your compound interest paying at now? What balance? 10,000. But what if I take a $9,000 loan off of this? What's it growing at then? 10,000. Do you understand why I am super excited about the infinite banking? I am so excited about it that I dove in head first because I wanted to get this set up. So now I have it set up to where I'm making deposits or premium payments into this IBC every other month. Why? Because I want to grow. I want to grow this with the guaranteed growth here of the compound interest. I'm not going to lose it. My kids are taken care of when I'm gone, and I can take it out anytime I want to. And I can pay it back and use it again, just like we do with the revolving lines of credit. You pay in, you can pull out as needed. I hope that you all get just a little glimpse of how wealthy this can make you, depending upon, are you doing annual premium payments? I do annual. I take out of my line of credit and fund these things. I do it. I said it out loud. I have some people that choose to pay monthly. So they started out paying monthly. That takes a little bit more time to build up, but hey, it works. It works. Maybe you have savings setting somewhere and you want to use it. Okay, so I'm going to erase this because this was good information. Love you. Love you. I want to keep this information in my head and I want to keep growing. This is why when I have like the 3-day conferences coming up in September, this is why I have Chris and Ogle come on, because I love to hear him talk about this. This is good information. But now we're going to talk about that loan that we take. I didn't even mention to you yet that the interest rate on these lines of credit are lower than what the bank offers. Okay, so I have 2 or 3 loans out right now, and my highest percentage rate is 5.35%. 5.35%. And if I have a $50,000 loan out, let's do the math, okay? So 50,000 times 5.35% is $2,675 for 1 year of interest. Okay. So I told you that I can't wait to throw money back into these things to pay this stuff off. Why? Well, because when I do this, say I do $1,000 deposit, okay? So they charge this annually. I'm making, say I make $1,000 back every single month. So month 2 times 5.35%, I would get reimbursed this interest. That would be the paying back the loan, the 1,000 part. So that would be 5.35. So $53.50 would come off of this amount, and they just put it right back into your cash flow. So let's do month 2. I make another $1,000. Okay, so 1,000. It's going to be a little bit less because we're in month 2. So this is month 1. This is month 2. Month 2, you're going to do 1,000 times 5.35%. So about $44.50 would be paid back into my cash flow. Why? Because it's coming off. You're never going to pay this much interest in a year. Even though it's a low interest rate, you're still not going to be paying that much, because every payment you put back in, they're putting your interest back out into that cash value because you are paying it down. So the idea is, if you're getting back these amounts every month from where you're paying back this initial amount that you took, you're never going to pay $2,675 in interest. So when you get these policies, whether you start a big one, let's say that you can afford to do $50,000 a year. I do 6 of them because, like I said, I am funding them so that I can kind of become my own banker, where I'm able to take all the money and use it as I need it from my whole life rather than from a bank. Okay? You could set yourself up for success too. And the point being is that you can take the loan, which is a line of credit, because remember, I'm paying it back. I'm paying it back. So why? Because I'm going to be able to use it again. That's not a loan, that's a line. Super exciting. Okay? So some people, I am just saying what I do. I use my lines of credit to fund these. So I have 8, 9 total policies. The first 4 were set up wrong because some clown in my area told me he knew how to do the IBC, and he set me up in IULs. Wrong answer. According to Nelson Nash, this needs to be a whole life, especially designed whole life. Okay? It's exciting, people. It's something you should at least think about. If you have savings sitting around that you want to grow at compound interest, and you want to be able to use it if you need it, excellent. It's excellent. I know I'm forgetting something else. I know I'm forgetting something else grand about these things. The interest that it's paying, mine right now with the policies that I have, they're drawing about say less than 5.5%, 6%, somewhere in there right now. So, and that's compounding. What does that mean? Well, it means if I'm got a $50,000 balance and it's growing at, say, even 4%. Let's do the numbers. So 50,000 times 4%, that's $2,000. Am I doing the math right? 2,000. All right. So doesn't that now mean that over the year I would have 52,000? Then the interest would be calculated on the 52,000. This is compound interest. It's whatever it is, whatever the math is, whatever you have there. It is that interest being applied, and then you're getting the interest on top of interest. So let's start small. If we have $1,000 initial deposit and it gains $10 even in a month, you now have $1,010, right? So your interest payment that goes in again. So the interest pays, and maybe it's $10.50. So 10 or $1,020.50. The next interest payment goes in. So see, it's growing, gaining. Maybe the interest is $11 this month. So 1,031. So you see how your 1,000 is growing just because it's growing at compound interest in your account. That's what this does, is it grows. Okay. So the idea being that you've got your savings sitting in something that is growing, compound interest, paying dividends. Now, I'm not even counting the dividends in here because they are not guaranteed. All right. The compound interest is guaranteed from the time you start your contract with the insurance company. But the dividends are just paid out as, that's kind of a payout of the insurance company didn't have as many fees or as many bills to pay in the month or year, so they pay you back a little bit just to be nice because you're in the mutual, you're one of the policy holders. So that is why they use the mutual insurance companies, so that they are able to get dividends paid back into these accounts. It's beautiful. It's beautiful. Okay. Let's see what else. Let me see if you guys have any questions. Oh, so Patty, you have, awesome. Let's see. Hi, Chris Binder. Thank you, Patty. Thank you so much. I'm struggling with putting my money into a concept like this or at all in one. I've not found a good breakdown comparing the two with real numbers. Chris, I have a guy that you can talk to about that if you would like. You can book an appointment. It's a free consultation. You're welcome to do that. I'm doing my IBC now. It's exciting. Good for you, Cleveland. So glad. So glad. It does work. I've been doing it now for a while and I love it. I love it. Hi, Miss Breezy. I haven't seen you in forever and a day. How nice is that? Okay, so let's see. Let me put in the information for you to be able to ask your own questions in the infinite banking concept, because it's super exciting. Super exciting. I'm also putting it in the description so that you can see it underneath the video. I'm telling you, people, when you get your money under control and you start learning the different avenues to really, really just change the whole game, it is beautiful. It is so beautiful at the knowledge that the good Lord has put my way so I can learn some things to do with this whole, oh my gosh, this whole system. And there is a way to think outside of the box, and there is a way to win. There is. So get excited about it, because it's fun. It's fun to be in control of your money. Okay, now I am going to see if I can go back into here. All right. So I am going to jump off of here. I just wanted you guys to, understand that there are options for keeping your money in other accounts other than maybe just that savings account that you're letting it sit in. You are welcome to jump over to the YouTube channel, VANNtastic, and find out more information there. There's all kinds of information that is completely free on the YouTube channel that you are welcome to learn, get your finances in order, get excited about your money again, because I'm excited for you. And, I think it's only deserving that you would be able to take care of your money in this way. A way that makes you feel empowered. If you watch the YouTube channel and you learn from the videos, it's going to transform your financial life. Which, once we transform our financial lives, guess what? We have transformed our entire lives, because why? I wouldn't say money is the most important thing on the earth, but it's right up there with breathing, right? So the idea is to get informed about what other options that you have, because it may be all you need. I did not know this stuff. I had no idea. I had no idea how anything worked with the banking system. I thought you got a job, you wrote down what you made every week. I mean, seriously, this is what my kitchen table finances looked like. Okay, so here you go. Okay, I brought home $500 today. So my paycheck was 500. And then, okay, so I have to pay $50 to the electric bill. This is back when I first learned. So electric bills are higher today. And I have to pay, I got to have food. So $100 will be for food this week. All right. And then let's see, I need to pay for my phone. So my phone this week is like $65. Okay. So I'm paying my phone for the month. So that's paid. Whew, that's done. Whew, got that done. Oh, look, paid my electric bill. Whew, that's good. Okay, look what we got out of this check. Okay, good. All right. So not only that, though, I'm going to have to buy some gas this week. So I'm probably going to spend, I don't know, $40 in gas. So now I forgot, but I have that car loan due, but I don't think I can pay it this week because, well, by the time I paid my phone and my electric, but I'm gonna go ahead and my car payment's $250. So I'm gonna write it down here. I'm not sure I can make it, but I'm gonna try. All right. Yeah, dang it, I forgot the car insurance. It was late yesterday. I really need to pay the car insurance. So let's see. That's $100. I've got to pay the car insurance. I've got to. They're going to take my car. Okay. So, let's see now. I feel like I'm forgetting something. Oh yeah, Netflix. Netflix was coming out. It comes out automatically. So that's out. So let's do the numbers now and let's see where we're at with my $500. So 500, take away 50, 100, 65, 40, 250, 100, and 19.99. Okay, I have to take something away because I'm in a negative. I'm in a negative of 124.99. Oh my gosh. I knew this was going to happen. Okay, so okay, it's okay. So what I'll do is I guess that I just better I have to make the car insurance because it's already late. It's in that default stage where they're like going to, like charge me extra and all that fun stuff. So I'm gonna go ahead and pay this. Okay. Man, oh man. It looks like that my car payment, I'm going to have to wait on that car payment. Even though it's going to go over the due date and they're going to charge me a late fee, that's okay. I cannot get it in this check. I just can't. Okay, so let's forget the car payment. Maybe, just maybe. Okay, wait a minute. I'm only $124.99 in the hole here. My car payment's $250, so $250 minus $124.99. That means I have $125.01 available now that I know what I'll do. I'll go ahead and I'll figure out next week's check, $500. All right. Okay. So I'm going to need $125 of this to finish my car payment, right? So I'll keep this in the bank, right? And then I'll take that and that's what I'll do is I'll go ahead and finish the car payment with next week's check. That's it. Okay, so it didn't get paid here, but we're going to take the savings, we're going to put it into this, right? So really we have $625. And now we'll do the car payment over here in this week. Okay. Now we still have to pay for food because we're in another week. So $100 for food. All right. We have to pay for gas because we've got to go in the car. Gas. And let's don't add the daycare expenses in here because God forbid we have daycare because we're not going to be able to afford it. Okay. So let's talk about though we have the water bill. What is that? Let's see. We can pay the water bill. Let's say it's $40. So the water bill's due. All right. What else do we have? We have food, gas, electric, car insurance. We got that done last week. We got the Netflix done last week. That's awesome. Now we are figuring out what else we have to pay in here. So you all name things that you pay because I can't think. Food, gas, water, electric, phones. Oh my gosh. It's been so long since I've had to pay bills. All right, what are you all telling me? What are you telling me? Okay. All right. So cable bills. Oh, God forbid there's a house payment. Do you mean there's a house payment? I forgot the house payment, and it's going to be $800 rent this month. But there's no way I can get this out of my no way I can get this out of my weekly check. So here we go. We start with 625 because we held over if we were able to do it, because more than likely we didn't make it to the next paycheck because something else came up that we needed to spend money on, right? So 250 for the car payment, 100 for food, 40 for gas, 40 for the water bill, 800 for rent. Oh my gosh, here we are, hun. We're in the negative again. A negative $605. So what does this mean? Well, you know what that means. That means we're going to have to pull it over into the next week. So who lives like this? Who lives like this? I know you're out there because I lived like this. You were always robbing Peter to pay Paul. Okay? The fact is that when you're living out of a checking account, you're going to fall into the negative. Okay? Yeah, reality bliss. Isn't that the truth? So the point being that you don't have to live broke. The channel, like I said, the YouTube channel's free. I mean, I put reels on Instagram and on TikTok too, but the YouTube channel has those videos for you to review, for you to get excited. Oh my goodness. It's so exciting to know that there are ways to use your money that you never even thought about. You never even had any idea about. The infinite banking concept that we were talking about earlier, that's an option. I think it's a beautiful option. I'm excited about it. You may be not there yet. And I completely understand because I did not do anything like that at all until I got my pay under control, till I got my debt under control. Then I started using the lines of credit to fund those. Okay? Math is hard for me too. Oh my gosh. I flunked. I about flunked. I barely passed Algebra 1, Algebra 2. Did pretty good in geometry, and I learned that later on when I was working because I am a certified welding inspector by trade. So you kind of have to know geometry when you're doing the ultrasonic testing. So anybody out there know about that? Okay. It's just a whole different life, no matter what your work is, when you know how to use your money and use it to serve you, for goodness sake. So like I said, this transformed my life, and I want you to be transformed. I want you to be excited about your life again, because a lot of you are miserable. A lot of you guys are absolutely living in shackles, a prison, chained to having to go to work every day, because if you miss a day, you're going to be into a worse negative in that week that you missed the day. I know. I did that. My kids, if they got sick, I would feel so bad because I was like, oh, I want to be with them, but I can't miss a day. So I missed the day, and now you've got to find some way to make up the money that you missed. And I had it down to the day. I knew that if I missed a day of work, when I was working, when I first learned about the velocity banking, I knew that if I missed a day, I was losing $100 in that day. And $100 to me was, I was already paycheck to paycheck. So there we're going into the negative. And you may be that person. And I would about bet we got some people watching right now that you are absolutely that person. And I want to bring you up out of that. That's all I want. Don't pay me a thing. Don't go through any classes. Don't attend any 3-day conferences. Just watch the videos and see if it doesn't change your financial life, because that's all I'm going for here is I want you guys to get free. And you now have ways to get free if you want to. Okay, so does anybody have any questions before I leave? What's the internal rate of return in Lafayette Whole Life? Great question. You're talking about compound interest there, and you're talking about the dividends. I think that's what you're referring to. Or are you talking about when you pay your loan back? The rate of return. You're talking, it depends on the policy, right? So I think that my rate of return is right at 6%, including those dividends, okay? So total with the dividends is what I mean to say. So 4 to 6%, and the rate being around 3.5% for the compound interest that you're paid, and then the dividends on top. So I'm guesstimating because I'm trying to think of what my own are doing right now. So when you learn how that works and you get into your own policies, you'll be able to go into them and look and see what's happening inside. So the idea is that they are growing at compound interest. That's what matters to me. Okay. The loan rate to borrow is mine right now. One is at 4.6 and one is like at 4.85 or something. And then there's a 5.35, I believe, my interest rates, because I have 6 policies. So I have 3 policy loans that are getting paid back. Okay. I am not selling insurance. Did somebody say that? No, it does not depend on your credit. They do not check credit scores or anything for these IBC policy loans that you can take. At least they've never checked mine. So the idea being is that you can check on that. If that's something you're interested in, then wear it out. If you're not interested in it, then don't wear it out and don't do it. That's all I can say. The idea is that you have options now and you can figure out how to do this, okay? Oh, good. Somebody says it's been life-changing for them. I'm so happy. It took me only a few months to get confident with this method. Beautiful, beautiful. It took me a year to feel comfortable with doing it. It hit me like that. As soon as I heard about the velocity banking, how to control your money, it hit me like that. I knew it when I heard it. I was like, oh my goodness gracious. That was beautiful, whatever that was. I have got to do that. And I started doing it. I mean, from the very first day, I heard Matthew Pillmore talk about how to take those credit card payments away. I was on board and I got so excited. I got so excited that day that from that point on, I have literally been checking out every bank tool I can to see how it's going to work for me. You can do the same thing. you can do the same thing. You do not have to be banking on my word. Try it out for yourself. Try it out for yourself. It is absolutely awesome. I'm so excited. Let's see. If I just had one kid, it'd be worth 600,000. I'd be worried to go to sleep with my kid around. I'm kidding. Okay, what in the world are y'all talking about? This is the whole life we were talking about here. Let's see. Yes, interest is paid annually. Payments made during the year applied to the principal, which decrease your interest. Yes, very good. A lot of you guys have some good information here. Oh, that's great. Abner, good credit scores there. Good credit scores. Awesome. This is totally new for me. Never heard of it. Thank you for the info. I really enjoy your explanations. It is my pleasure. It is my pleasure. So I put the link in the chat over here in the YouTube channel. If you want to check out the infinite banking concept, you can go there and schedule your own appointment with one of our team members who will teach you, show you whatever it is that you need to look at. If you have savings, if you don't, if you have a line of credit, whatever, you can certainly get started in your IBC. There are some things, this is a health or life insurance policy, so your health does have to be at least standard. And you know what? I'm 53, almost 54, and literally have gotten the preferred rating. So it's easy to do. It's exciting to do. I also have it on I have them all three of my daughters. So, you know, it depends on what their income is. If it's, especially like if they're working now. Now, my 15-year-old, of course, she's not working, so you can only get so much. It's based on what my life insurance is, the amounts I have on myself as to what I can get on her. But I'm teaching her the same thing, this concept, because when I kick the bucket and their payouts come to them being the beneficiary of these policies, and they know how to use infinite banking at that time, then guess what? They're never going to want for anything because they're going to start their own banks with the monies from these death benefits. So this starts a real legacy for you and your family for generations. But you have to teach them how to use them, because if you're not teaching them how to use the policies, what the infinite banking concept is, then as soon as they get the death benefit, they're going to go off and probably do stupid, right? But if you've trained this child up in the way it should go, then when it gets any monies, it's going to say, okay, I've got to set up a whole life specially designed policy so that this money, this death benefit, can now start growing at compound interest, and I can start gaining dividends if I'm with a mutual insurance company. And it's exciting because are they ever going to need to go to a bank again if you leave them 100,000 plus? No. We want to prepare our kids. We don't want to just learn this for ourselves so that we're happy and healthy and our money's together. We definitely want to teach the children and our grandchildren so that when we're long gone, they're not going through this crazy banking system that we've had to deal with here. And they're excited with their money, right? So I hope you guys have learned something here today. I'm so glad, Ivan, that you love velocity banking. I do too. Yeah, they don't understand kids, kids kind of, I kind of think that you gotta suffer a little bit, because I suffered to get where I am. I suffered because I wanted to learn better, because I was tired of suffering. When we've got kids that are coming up and they've never even realized that it costs something to buy because mom's already bought it, or she's been buying all my life. Oh, wait, money doesn't grow on trees? Well, I tend to believe it does. I have money trees. Anybody know? That was a good joke. A money tree. I have 2 of them. So the idea is that as they learn how money works, then they'll talk to you about it. So my 2 older daughters, who really they're working, but they're just now getting into the home buying thing and really starting to feel the effects that money can have on your psyche, your emotions, that stress that we all have felt. When they start feeling that, then they come to you and they start talking to you a little bit about the money and, why do I feel like I'm broke? I'm making all this money. Why do I never have any money? And you can say, honey, sit down here and let me talk to you, because I'm going to teach you how to use the tools at the bank, how to use whole life policies, and you're not going to go through what I went through. But they might have to suffer a little bit before they get to the point of asking you. Okay? Don't be surprised. I know I've just had to totally go through that with my girls, and I'm assuming that all children may have to suffer a little bit. Isn't that what transforms our lives, is when we go through a really, really hard time and then we learn how to come out of it? That's transforming. That makes you a better person when you're growing in experience. So kids have to grow too. That's why they need to feel the pain of stuff sometimes, is because life is not fair. It's hard. And guess what? You got to get really excited about living in it, because things are going to knock you down and you're going to have to get back up. We don't lay down there and feel sorry for ourselves. We don't lay down there with the victim mentality of my mom did this or my dad did this, or oh, I was so mistreated, or my husband did this. Don't let me go into talking about the ex, please. We all have a hard time. Every single one of us have had life to smack you down. It doesn't just go, oh, there you go. No, it stomps your face in the ground. And you have to pick yourself back up. We all go through that, okay? All right, so I want you all to be super excited about everything financial. Again, I am not a financial advisor. I am not an attorney. I'm not an accountant. I am somebody who has lived a life experience, and I am super excited that you're excited about getting into a new way to use your money. Super excited. So the thing is that you have options. You have options, and don't listen to naysayers. They're all over the place. We got some clown in here talking right now and TikTok. Don't pay attention to people that have nothing good to do but be negative, okay? Because there's so much negative in the world. Turn on the news, okay? Stay positive. Stay excited. Don't listen to negative people. People that say, oh, well, this seems like this is a real joke. This seems like a scam. Well, then go somewhere else. Nobody asked you to come here, right? Nobody asked you to come here. So the thing is you do not have to put up with naysayers. You need to get that junk out of your life. Get that junk out of your life and say, I'm not going to do it anymore. All right. I'm getting ready to shut this one down. So the thing is you stay positive. Okay. You stay positive. You stay excited. And there's so much going on in this financial world. It just keeps blowing up as far as good news, other ways that we can work our money. So I just want to give you all a moment of peace and hope that you guys find total peace with not just your finances, but also your life. And remember, God gets all the glory. If it wasn't for him, I would still be broke paycheck to paycheck. But to seek you first the kingdom, and all those things will be added. And I am a total believer in that. And I will believe in that until I'm gone and with him. So I want you all to be excited and know that all you do is you ask. And you've obviously asked that you're here at this channel right now. So I hope that you guys have a terrific rest of your night. I am going to jump off